It's time for me to now invite on stage Shri Amitabh Kant, G20, Sherpa and former CEO NITI Aayog, Government of India, to share his viewpoints on today's theme. As someone who has played a pivotal role in shaping the economic strategies at the national level, his insights are eagerly anticipated. May we request all our delegates back here to kindly greet him with a big round of applause, dear guests, as we welcome on stage to impart his invaluable perspective. Shri Amitabh Kant, may I request you to kindly join us on stage, and let's welcome him with a big, big round of applause.
Vinash, all the distinguished, Mr. Koshi, distinguished guests, ladies and gentlemen. I'm truly delighted to be here, and let me first congratulate Dun & Bradstreet for these two wonderful publications, one on lending and the other one on leading MSMEs of India and lending to the mid-corporates. I'm truly delighted because these kind of datas based on performance, based on outcomes, based on good governance is really critical for India to grow rapidly. And India, if it is to become a $35 trillion economy by 2047, if India is to become the third largest economy by 27, and if India is to create large number of jobs which are very critical for India, then the MSME sector will be very critical to my mind. I think India has done several major things for growth and prosperity, one of which is that vast number of structural reforms have been carried out. We've seen the goods and services tax, which has led to more than doubling of the taxpayers in India. We've seen growth rates of about 15 to 20% month by month on GST collection. We've also seen the formalization of the Indian economy. We've seen better credit discipline with the insolvency and bankruptcy code. We've seen vast number of laws. I think India is the only country which has eliminated 1,600 laws with scrapping of a number of rules, regulation, procedures for ease of doing business. We've seen the Real Estate Regulation Act. We've seen the lowering of the corporate taxes. Many of these things are basically in the nature of structural reforms which are delayed for a very long period in India. But we've also seen a huge amount of infrastructure being built up in this country. In the last decade, we've seen 40 million houses being provided to people without houses. We've seen close to about 130 million toilets being built in India. We've seen 253 million piped water connection. And we've seen close to about 88,000 kilometers of roads being made. And all this actually, this vast amount of infrastructure creation, which has led to India's capex spend on GDP going up from about 1% to close to about 4%. And I think now with this 2.1 lakh crore bonanza from RBI, you will see in the new budget probably the capex spend to GDP will go up even further. So this amount of capex spend will provide a further growth stimulus to India's economy in a very big way. And the third, other than structural reforms and infrastructure creation, the third big thing that's happened is the vast amount of digitization that has happened in India's economy. Not merely that everybody has a digital identity, that between 2015 to 2017, we were able to open 550 million bank accounts and then through an accelerated process link them up with both the identity and the mobile But that has led to a very huge amount of fast payments. Last year we did about 130 billion fast payments transaction, which is 46% of the fast payments, real-time fast payments in the world. We did 130 billion. China was next with 26 billion. So this huge difference demonstrates the acceleration of pace in digital transaction. But then it led to many young startups, Mobake, Pine Lab, etc., who started doing credit based on payment history. And then many other startups who took this onboarding digitally to tier 2, tier 3 cities and rural areas, and therefore you have Zerodha, Grow, Upstock, who are today controlling almost 30% of India's stock market, taking wealth creation to these cities and rural areas. And then you had another set of startups like GoDigit and Acco, which actually took insurance to these areas, tier 2, tier 3. And when I was a young officer, it used to take me 6 months to get a insurance. Today you are able to do a stock transaction or a fast payment in 30 seconds in India. You can do an insurance in 1 minute on the go, on the mobile. And the cost of acquisition of a customer has fallen very rapidly from close to $100 to less than $1 in India. And that is why, a company like Reliance could actually acquire 450 million customers in 10 months' time in India. So a huge amount of transformation has taken place. We are also pushing for green growth in a very big way. But it's critical that when India grows rapidly, it is able to create many more jobs. And growth with jobs will be critical. And therefore, to my mind, India's growth story will really be fueled by the MSME sector in a very big way. And it's very critical that we are able to really make MSMEs a very integral part of not merely the domestic growth story, but make them a very integral part of the global value chain. So India's 3 crore MSMEs actually registered on Udyam portal. They support 40% of India's exports, and they employ close to about 15.5 crore people in India. Therefore, this, to my mind, they will grow and prosper if we are able to ensure that we are able to provide greater credit, we are able to provide modern financial instruments to the MSME sector in India. And this, to my mind, is very critical for Indian sectors, many of these Indian sectors like textile, garments, many of them to grow. But it's also important to understand that while 99% of India's MSMEs are actually micro enterprises, they contribute to about 99% of micro enterprises. And what really demonstrates is that while they contribute to 29% of India's GDP and 21% shares of MSMEs, manufacturing comes from them, in terms of gross value added, what it demonstrates is that in India, the micro is not able to become small, and small is not able to become medium, and medium is not able to become large. And this is their persistent characteristic of remaining small in India, unlike many other countries. Like if you go to Korea or if you go to Japan, the micro becomes small in a period of 3 years, and then small becomes medium. This is a challenge of, to my mind, is a challenge of lack of adequate flow of credit, which is very important. And it's important to deepen the credit markets for the MSME sector. And I'm saying this because my belief is that the credit flow in India to the India's private sector is very, very low. The domestic credit to private sector is 50% of our GDP. That's credit to GDP ratio is 50%, whereas if you look at the worldwide average, the global average is close to 144%. We are at 50% of our GDP. The world average is 144%. If you look at the developed countries, South Korea's ratio of flow of credit to GDP is about 179%. In USA it is 210%. US is to the extreme. But if you look at China, it is close to about 188%. And the developed countries in Europe have ratios ranging to between 100 to 110%. So we are at 50%, developed countries are at 100 and 110%. So unless and until you are not able to flow more credit to these people in the MSME sector, it will be very, very difficult to my mind for MSME sectors to grow and become bigger and bigger and bigger, which is really the key. The second challenge, to my mind, is that India doesn't have too many large companies. If India has to grow at 9 to 10% per annum and become a $35 trillion economy by 2047, two essential prerequisites is that you need about 12 states of India to grow at 10% year after year, year after year, year after year. It can't be that the southern part of India and the western part of India grow. You need the eastern part of India, you need Bihar, Jharkhand, Chhattisgarh, Madhya Pradesh, they are all the mineral-rich states of India. They need to grow at 10 to 12% per annum year after year, because without them growing it will be very difficult. And secondly, India needs to have 50,000 large companies, because large companies actually create their own ecosystem of Tier 2, Tier 3, Tier 4 producers. And there's a backward forward linkage between big companies and MSME sector. I mean, wherever MSME has flourished, it's because there are large companies, and actually medium companies go on to become large companies. So my view on this is that India is a country starved of large companies. And when we designed the PLI scheme in NITI Aayog, the entire objective of the PLI scheme is that it should help companies to become, there's only one single objective. How within a period of 5 years can you make a company grow bigger and bigger and bigger and bigger based on its increased production? And many people now talk about providing, ensuring that there is some outlay for startups, some for MS. That is not the objective. Objective is just focus on making companies big. If the companies become big, you will also have large micro will become smaller, smaller will become medium. There will be a backward forward linkage to that. And therefore, to my mind, it's very, very important that we are able to make states grow, we are able to make companies grow. But let me come back to this challenge of credit for MSME, because MSMEs really face the problem of being the missing middle in credit. While large enterprises actually access loans from banks, and NBFCs and microfinance institutions cater to the bottom, NBFCs and microfinance cater to the bottom of the pyramid, and MSMEs, so you have large banks providing loans to the large companies, you have microfinance and NBFCs providing to the bottom of the pyramid. The MSMEs are quite often actually left behind. And the gap has resulted in an MSME credit shortfall of about Indian rupee 20 to 25 trillion estimated by RBI in 2019, with 89% of MSMEs lacking access to formal credit. So there's a shortage of formal credit, there's a shortage of credit shortfall to the MSME, and there is a huge, to my mind, this is one of the biggest challenges which India is facing. And so we've to address this challenge, the Open Credit Enrollment Network, OCEN, actually considers income, it considers receipts and tax returns, and it enables credit more accessible to small business owners and home-based enterprises, because it will be all digital based. And the flexibility afforded by a digital first and technology driven model means that the needs of India's MSME can actually be addressed, and MSMEs, they can be addressed because actually MSMEs require small and frequent loans along with flexible repayment terms. And this is what use of good digital technology. Now we are throwing up so much of data through GST. We are throwing so much of data through digital payments. We are throwing so much of enormous amount of data which should enable us to actually look at income receipts, transport networks, tax returns, all enabling open credit enablement network to make credit flow. So this can be a long-term solution. We should be also able to leverage technologies, particularly artificial intelligence and machine learning, to scale up cash flow based lendings to MSMEs. Rather than looking at collaterals, this should all be cash flow based lending to MSMEs, and we should be able to explore new lending models such as invoice based lending, the point of sale financing. These are important for our financial institutions to pursue. Similarly, embedded finance allows for the integration of financial services into non-financial products. Many MSMEs are now integrating in the formal economy, and therefore, along with increased use of technology in daily operations, that is accounting, billing, tax, etc., e-commerce is a great example of this, and I'm glad that you have Mr. Koshi, who's given you a presentation on ONDC and the progress made and why we need to get into ONDC in a very big way. So, ladies and gentlemen, my belief is that together with the Open Credit Enablement Network, account aggregator system and embedded finance, credit access can be scaled up massively in India for the middle MSME sector. And the combination of accessible credit through all these both OCEN, transactional use of UPI and market access by ONDC will all contribute to India's pace in the global economy. Ladies and gentlemen, this is truly India's decade, and India's technological decade is crucial to understand the transformative power of DPI, and as we integrate the digital public infrastructure with artificial intelligence, as we've done with Bhashni, which has enabled people living in rural areas to access all the government services in their regional language and dialects. You can speak in your local dialect, voice only, and get access to all the state government schemes and central government schemes thanks to the powering of Bhashni with artificial intelligence. They can fill up the form through voice, get all approvals on voice, and get benefit of all government schemes on voice. And that is what will happen in due course with both startups and MSMEs with the combination of DPI and artificial intelligence. So to my mind, MSMEs are critical. They are critical for India's growth story. They are critical for India's progress. They are critical for if India is going to have growth with jobs. Without jobs, India cannot grow. There will be huge political upheavals. One of the lessons of the recent electoral process is that people want growth, but people also want growth to create many more jobs. And that in the rural heartland is critical. And therefore, MSMEs are critical for India's growth story. And MSMEs will grow when credit grows, and credit will grow when we move to cash flow based lending, which will be based on the huge amount of data that we are generating if OCEN, account aggregator system, embedded finance all take off in India in due course, and we are able to fill this missing middle for the MSME sector, and we are able to really leapfrog so as to take our lending credit to GDP ratio in a very scientific, planned manner from 50% to the global average of 144%. So I'm truly delighted that Dun & Bradstreet has come up with this wonderful 2 reports. which will add huge value to all of us in the world of policy. It will add a huge amount of value to all of you in the MSME sector, and it will add huge value to anybody doing research as well as in the world of business. So I congratulate you, Avinash, and your team for this outstanding work, and I congratulate all the MSMEs who've done such path-breaking work in India and who are really the backbone of India's growth story. Thank you very much, ladies.